When you miss a credit card or mortgage payment, your bank's standard advice is to write a hardship letter. They want you asking for mercy. But behind the customer service scripts, there is a technical reporting loophole, a specific administrative opening that allows you to challenge the digital records they send to the bureaus. 100 points, instantly moving a borrower into the subprime category. That drop has a specific price tag. On a standard 30-year mortgage, a subprime rating can increase interest rates by up to 2%, costing a homeowner over $50,000 in additional interest over the life of the loan. Most people try to fix this by mailing a generic explanation of their situation, hoping for a human investigator to show compassion. In a digitized financial system, that approach is almost entirely ineffective. Correcting a late payment is a technical data dispute. Success depends on identifying a specific failure in how banks and bureaus share your information. A standard dispute letter sent to a credit bureau enters an environment built for speed. These documents are routed directly into sorting algorithms designed to process millions of claims with minimal human contact. The bureaus rely on a centralized automated system called eOscar. It is an electronic clearinghouse that allows Equifax, Experian, and TransUnion to handle disputes without hiring thousands of manual investigators. These programs scan for common phrases used by credit repair clinics. If the software identifies a generic "it wasn't me" excuse, it can legally categorize the dispute as frivolous and reject it immediately. Instead of investigating the facts, the bureau sends a digital inquiry to the bank. If the bank's computer confirms that their internal record matches what was reported, the bureau rubber stamps the original entry. This process is designed to protect the bank's data integrity, not yours. To find a vulnerability in this automated wall, you have to look past the credit bureaus and go directly to the source. The strategy shifts when you target the furnisher, the bank that actually provided the data. You aren't arguing about whether you were late. You are challenging the technical metadata of the report itself. Banks use a standardized digital language called Metro 2 to transmit your account status to the 3 major bureaus. Under the Fair Credit Reporting Act, a payment cannot be reported as late until a full 30-day cycle passes from the due date. If paid on the 25th, the bank charges an internal fee, but transmitting a late code to bureaus violates federal standards. Forcing the bank to verify the exact timestamp of that electronic transmission is a direct challenge to their automated compliance. To trigger a mandatory investigation, you must utilize a specific administrative procedure, a direct dispute under Section 623 of the Fair Credit Reporting Act. This document requires a precise structure to reach the correct department. First, provide clear identification, your full name, current address, and the specific account number. Next, you identify the factual error. You aren't offering an excuse. You are explicitly challenging their Metro 2 reporting dates against the actual ACH clearance dates in your bank records. You must also include physical evidence, such as a copy of your bank statement showing when the funds cleared. Providing this documentation prevents the bank from dismissing the claim as frivolous under Section 623. By citing 15 U.S.C. Code Section 1681S2 directly in the letter, you ensure the document is routed to the bank's legal or compliance department rather than standard customer service. This administrative notice forces the bank to conduct a manual audit of their own internal records to substantiate what they reported. For a bank's legal department, manually verifying original electronic transmission timestamps is a slow and expensive process. If the bank fails to complete this investigation within 30 days, they violate the Fair Credit Reporting Act. This creates a risk of civil damages and triggers a fee-shifting provision, meaning the bank could be forced to pay your legal costs if you sue. This creates a clear decision for the compliance officer. They have to weigh the high cost of a manual audit and legal risk against the zero cost of simply deleting the inaccurate late payment. Because the goal of a compliance department is to minimize financial risk, they will often choose to purge the disputed data rather than pay for a full investigation. To deploy this correctly, send the notice via certified mail directly to the bank's corporate compliance address. This creates the legal paper trail necessary to hold them accountable to the 30-day deadline. The credit system relies on automated silence, but it responds to the correct administrative code. Subscribe to stay updated on how to navigate these technical reporting standards.